Hello. Can someone confirm you can hear me now?
Good evening, sir. We can hear you, sir.
Yes. Very nice.
All right, thank you, Abubakar. Yeah, I understand that some of us might still be on our way home, and hence why I said it could just be a chat. It could just be a chat and not necessarily you speaking. But yeah, thank you for confirming that you can hear me. All right. Good evening once more, and welcome to week 11 of our class. Um, I have something to. I think I will take it later. Yeah, I was meant to give us updates on the video lecture, like I said last week that I was going to do today. But let's see. Hopefully, as we continue, we'll have more people join. Henry, please, can you mute your mic? So
Oh,
hopefully,
sorry.
hopefully we have next week we have more people join, or probably later before we end the class. Then I can share the updates on the new video Starry Gold SFM video lecture. Okay, so today we're talking about capital asset pricing model. It's a topic that is important, especially for this level. Yeah, so we have to look at it thoroughly, and we have to dissect the topic. Okay, so but as our practice is, last week we consider. Okay, maybe I should start by asking, what did we look at last week? What was our topic for last week? Please, you can use the chat box, like I said, if you're unable to unmute and speak. I understand some of us might still be on our way home. Yeah, so what was our topic for last week? Just drop a chat, or you can unmute yourself to speak. Can someone please break the silence? We don't have all the time this evening. What did we look at last week? Or was it last week we did discussed our I don't think last week our mock. So please, I'm waiting. What did you discuss last week? If I even have it on your screen. Okay. What did we discuss last week? What was our topic for last week? Okay. Yeah, Abiodun, go ahead.
Good evening. You're welcome again today. Last week we talked about BUD, so we should give the room to everybody to to tell us what they know about BOD. That is Board of Directors. So we talk about role of the Board of Director, the composition. Thereafter, we move to CEO, who is CEO, who is the chairman, and the purpose of their enumeration and the evaluation of them. We should talk about board of director are the set of people that allocate their sufficient time to the company in order to achieve the responsibility effectively. So we now discuss that we have two category of BOD, which is we have independent and non-independent, which is executive and non-executive. So we now go to the roles. We discuss the role of the board of director, which is they are to make a strategic decision about the business organization and utilize their resources. Also, we talk about they are responsible for day-to-day business running and operations with decisions. We also talk about to ensure the human and financial resources are channeled towards the goals and objectives of the organizations. So that's all about board of director. So we now discuss about the formality of BOD, which is composition. So we know you mentioned it that we have chairman, deputy chairman, secretary, and the secretary are not parts. But we discuss that when the company have the secretary, it can be part of the composition of BOD in order to take the minute of the meeting. So we have HR, that's human resources, and also non-executive directors and advisory members, and so on and so forth. So that's the composition of board of directors. So we now discover about the chairman. Who is the chairman? We should ask every individual to contribute their quotas. What do they know about chairman? What are the responsibilities and duties of the chairman in the organization and in the board of director? Which I could remember that I gave the definition that the chairman is the owner of the organization, which you corrected us that is not mainly the chairman of the organizations. So chairman is the head or leader of the board of director that frontier the meetings. So executive director are set up for individual who has the management responsibilities and usually involved in day-to-day of the business activities. So we talk about CEO. CEO are the owners, yes, which okay, I could remember I said it is owners and the founder of the organization, which you corrected that it can be the chairman can end up being the chairman of the organizations, and they are can be appointed by the director for single term, yes, single term, which is minimum of 5 years in a term. So that's is it. Also, we talk about the evaluations of the evaluation of the board of directors. So how can we value them? How can we know their value in the organizations? So we number one, we talk about to ensure that the board of director fulfilling their roles and carry out their responsibility effective to assess individual directors that contribute toward the overall goal of the organizations and to ensure that the relevant skills and gaps of the director are addressed to meet the company demand. Also, the directors also to give the information about the performance of the organization, and all the directors must perform in their roles and their duty to fulfill the purpose of being in part of the composition of the board of director by doing the right thing, using their
All right.
time and energy. So and so on. Thank you, sir.
All right. Thank you for the detailed preview. So yeah, basically speaking to board of directors, the things that they do, their roles, their responsibility. And I would have allowed you speak and end in your talk, but I just thought to chip in so that we can maximize time. One of the things you said, which I think I should correct again, is that HR is not part of board of directors. HR does not sit with the board. Yes, we can have what we call COO, that's Chief Operating Officer. That's he or she will be the one representing HR in the C suits. So we have the COO, we have the CFO, we have the CITO, and all the C's, right? So they will be the one representing each business unit, at the board level. Or yeah, we can say maybe director of human resources, so to speak, but human resources officer, human resources manager, head of human resources, they don't attend. They are not part of the board meetings because they are not directors, right? So I just thought to correct that amidst every other thing that you have said. All right, well said. And I want to believe that everyone can, because I think almost everyone on this call was in the class last week. Nevertheless, I want to believe we can all take a clue from what Abiodun has said on our discussion for previous week. Okay, so today we're moving on. We're discussing CAPIM, Capital Asset Pricing Model. Yeah, so we're discussing CAPIM today, right? So it's one of the topic that we reserve for towards the end of the diet to discuss CAPIM. And yeah, so maybe I should just talk about the video lecture now. All right, Abiodun, please go ahead.
Sorry, I thought you said we should read the what's it called? The stakeholders
All
before
right, the
now.
stakeholders. What do you say?
Yeah, the stakeholder and what stakeholders and share stakeholders in the
Okay, all right, yeah, I hear you. So I said we should read the stakeholder, the mission, and all of those things, right?
Sir?
I said that I said we should read stakeholders.
Yes.
Okay, all right. So while I was checking today, sorry, I think I should have said that earlier to start with so that we won't be confused. So while I was checking today, I discovered that in the course of the diet, we've not looked at, I mean, it's not a waste that you have read stakeholder, the mission, and all of those things, but I just looked at it and see that the diet is gradually running to an end. I mean, next week will be almost done. Like next week will be our the last week for this diet. That's week 12. The other things that we most likely have to do is the end of the diet revision and all of those. And so I just felt it's important for us to bring some topic forward. If not, we may not end up doing it at all this diet. And again, I looked at it and see that, stakeholder mission and something like you said is something that you all can read on your own, even if we don't have the time to discuss it in the class on like important topics such as this, like CAPIM and the rest. Okay, so nevertheless, whatever it is that you have read about stakeholder mission is not a waste. I believe it's something that will still be relevant for you as far as SFM is concerned. If we have enough time next week, we'll come to it and then we'll see one or two things about it. Okay, so please, for the video lecture of SFM, I think I should just say that now before I forget. So if you have gotten, like I said last week when we met, I had mentioned that we are working on the new video lecture for SFM as far as SFM is concerned. As far as the new syllabus is concerned, we had identified some changes that happened in the syllabus vis-a-vis our video lecture, and I said that we're going to work on it and see whatever it is that we can do to make it up to standard, right? To make it up to the required standard for you to practice and study with for the exam. So yeah, so that is what we have done so we've completed that task, right? So please reach out to the Starry Good admin if you have gotten the new SFM. If you have gotten the new SFM video lecture prior to now, and when I mean you got the new SFM, that means you got this diet. So if you have gotten the new SFM video lecture, this diet, please reach out to Starry Good admin. They may have something to give you on that. So just reach out to them, let them know that you got the new SFM video lecture this diet. They will check, and then whatever adjustment that needs to be done to the video lecture you have with you, they will do that for you. So but if you've not gotten that, that means you most likely be getting the new and updated SFM video lecture. So if you, by the time you have that, the topics that we're discussing tonight, it will not be a question of, oh, I can't find it in my video lecture and all of those things, because we've tried to do as much as possible a thorough job comparing the pack, comparing the Ican study pack with the video lecture that we were selling. So please reach out to them anytime tomorrow, starting from tomorrow. Reach out to them and let them know that you got the new video lecture for SFM, this diet, and your lecturer has said you should please reach out to them on the possibility of if there are changes, so that they will let you know, and they will let you know how to get the new one that was just completed for student use. Okay, all right, moving on from there, I will speak to the topic that we have today is CAPIM, Capital Asset Pricing Model. Let me try to bring up my board. Okay, I thought I had someone raising up his or her hand. All right, so CAPIM is an acronym that means Capital Asset Pricing Model. That's the full meaning of the acronym CAPIM, Capital Asset Pricing Model. And of course, what the topic has to do is that it relates the expected return from an investment to the degree of risk that is associated with that investment. So CAPIM, what we try to do really under what CAPIM really states is that we try to look at the returns, and we look at the investment. For every investment, what are the commensurate returns? The rule of thumb will be that the higher the investment, the higher the returns as well, right? So but we try to look at it, is that the case at all time? How do we even measure to see that the rate of return is equal to the degree of investment? The returns that we earn, how do we ensure that it equates the degree of investment, the efforts? It's just like measuring your efforts versus the results that you get from it, the outputs. Does it commensurate with the level of input that you have given to something? That is what basically CAPIM is talking about. So, right. So now talking about the rate of return. The rate of return is made up of two parts. We have what we call the risk-free return, and we have the risk premium. We have the risk-free return, and we have the risk premium. Now, so risk premium, for the risk premium, we can derive the risk premium by applying the project beta factor. So the risk premium is usually the difference between, the project beta factor is usually the difference between the market return and the risk-free rate of return. Beta is usually the difference between RM minus RF, market return, and the risk-free rate of return. Now, okay, so you have a formula below to say RS is equal to risk-free plus beta into market risk minus risk-free. So that is just this formula is just a basics. It's just the basic way of defining what CAPIM is all about. So there are other complexity to it. For example, you can derive CAPIM when you are considering your weighted average cost of capital, as we're going to be looking at, right? And then you are asked to calculate what the CAPIM is, which will lead to which will lead you into getting what the work actually is. And of course, for the work, there are different variables you consider, which is the value of dividend, the value of the preference share, the value of ordinary share, the value of debt, and all of those, depending on the information that you are given, really. So this is just the basics. The two things that you need, as you even can see in this formula, is that you need to know what the risk-free return is and what the risk premium is. And with that, you will be able to get what your RS, right, under CAPIM talks about. So I'm going to start from there. I'll just start from the basics and then we take it up from there. Okay. So I need to move to the next one. Okay. So looking at the formula that I gave above, in case you don't have it again, I want to believe you must have written it down. But the formula says RS is equal to RF. RS is equal to RF plus beta into RM minus RF. Right. So that is what, excuse me. Okay. Yeah. So he said RM is equal to RS is equal to RF plus beta into RS minus RF. Now you have the illustration on your screen that says that is asking you that what is the cost of equity capital for Taraba PLC from the data given below using CAPIM. So like I said, this is just a basic elementary test, right? So this is not everything what CAPIM is all about. So you can see on the screen that we have beta 0.5, we have the expected rate of return on risk-free securities, 8%, expected return on market portfolio of 12%, and you are expected to calculate the cost of equity capital using CAPIM, capital asset pricing model. So based on the formula that I was given, this is SFM class. So can someone give us what RS would be? Please don't unmute, just type in the chat box. Let me try to put in the formula. Am I able to? Okay, I think I have to. Which of the sheet am I sharing now? Okay, please hold on. I think I need to share. I need to reopen the document and I need to reshare my screen. Apparently, I'm sharing the wrong tab. Okay, so let's see if this would work. So that tab, I won't be able to write. Okay. Okay. Come here. Stop sharing. Present something else. Window. This. Share. All right. Was someone trying to speak before? All right. Mary said 10%. Can someone else? Can we have an alternate answer? Can someone please check what has been said? What will be the RS? Let me just put the formula so that we can easily flow together. The formula say RS is RF plus B into RM minus RF. So this is the formula as you can see on your screen. So what is RS from this formula? I want someone else to confirm that figure. What did you get? Sorry, we don't have, can someone please confirm? We don't have all the time for this. Is anyone else attempting it? Can I get a yes or no so that we don't wait? If you're attempting it, can you just use the hand icon? Just raise up your hand if you're attempting it, so that if not, I'll just move on. Okay, all right. I'll give 30 seconds. All right, Abiodun, please, let's make it snappy. 30 seconds more, and then we move on to the second question. This is just to introduce us to the topic. Jesus. All right, okay. I think I'll just move on. It's 1 minute, 7:32. So this is RS. 8% is 0.08 plus 0.5 multiplied by 12 minus 4 is 4%. So 8%, 0.08 plus 0.5 or 4%, that would be 2%. 2% is 0.02, which gives us 0.10 or 10%. So, okay. I move on to, someone said 2%, someone said 2.32. So please check with what you have on the screen and confirm where the disparity is coming from. If you still do not understand, please use the hand icon button and then I will stop to explain. Just look at the solution that is on the board and then you can confirm where the differences are coming from so that you can quickly fix that. Okay, so moving on to the next question, question 2. We want to look at how to calculate. So look at this. So the next thing is to look at asset beta, what we call asset beta. What does asset beta mean? So from what you can see on your screen, the asset beta is the weighted average beta. Is the weighted average beta of equity and the beta of debt, including any relevant tax effects. So it is the weighted average beta of equity and the beta of debt. So that means we take beta of equity and beta of debt, and then we get the weighted average. We get the weighted average. That is what we refer to as asset beta, and it reflects a company's business risk. It reflects a company's business risk. So calculation of asset beta. How do we get asset beta? So asset beta is beta of equity, as you can see on your screen. Beta of equity multiplied by value of, VE multiplied by VE divided by VE plus VD. Okay, yeah, I think it's correct. So beta of equity multiplied by value of equity divided by value of equity plus value of debt into 1 minus tax plus beta of debt multiplied by value of debt into 1 minus T divided by value of debt plus value of equity plus value of debt into 1 minus T. So please take note of that formula on your screen. That is the calculation of asset beta. And what you can see below basically is just the definition of terms. What does BA means? What does BA means? Yeah, what does BE mean? BD, VD, VE, and of course the T. That's the definition of variables as we have it on your screen. Okay, let's go ahead and consider this illustration. We have an illustration on your screen that says that the most recent balance sheet of Kellington The most recent balance sheet of Kellington PLC shows the following, and then you have that on your screen. The most recent balance sheet of Kellington shows the following. We have ordinary shares of 50 kobo, 20,000, reserves 32.5, 10% debenture 15,000, and the total net asset is 67.5. In furtherance to that, the question says that the beta of company's asset is 0.763, while that of the debt is 0.2. Return on government securities is currently 12%, while the return on the market is 17%. The ordinary shares are currently quoted at 2.17 per share, while the market value of the debenture is 89.5x interest. The question is saying that using capital asset pricing model, determine the company's appropriate cost of capital, assuming that the rate, the company tax is 30%. Using CAPIM, determine the company's appropriate cost of capital, assuming the rate of company tax is 30%. Now, this is a proper question of using CAPIM to determine the cost of capital. How do you use CAPIM to determine the cost of capital? So the formula that I'd given initially would help in this case. And so let's just go straight to the solution. I want to believe I don't have any hands up. So let me close this. All right. So please, if you have any question, you can freshly use the hand icon button for me to stop. Solution.
Please, I can't see the board, your screen.
Who else cannot see my screen? Can someone else confirm that you can see my screen?
Yes, we can
Yes,
see
I
it.
can see your screen.
Okay, Mary, you have your hands up. Is that
I can see it now. I can see it now, but I didn't get the question. I wanted to screenshot this question, but I couldn't.
okay? So let me just give 30 seconds for that. This is the question. All right, I want to believe you've done that, so I'll continue. Can I continue?
Yes, sir. Yes, sir. Thank you.
So the name of the company is what again? Kellington PLC. And as per the question, we were given the ordinary share. The ordinary share. So let's have something like ordinary share is what we can refer to that as equity. Or no, let me even start from the working so that it's clearer. Now, if you look at the question, ordinary share of 50 kobo each was 20,000. That means the first thing is to get what is the total number of shares. Total number of shares is 20,000 for a share that sells for 0.5. If you do this, you get the total number of shares of 40,000 shares. 40,000 shares. And then what else? The total market value of the company. What's the total market value of how much are they selling the share? The question says that the ordinary shares are currently quoted at 2.7 kobo. Let me see. So if you check here, the ordinary shares are currently quoted at 2.17 kobo per share, for a share that sells for divided by 0.5, this gives us 40,000. So the total value of shares in value, the shares in value becomes 40,000 multiplied by value of shares. That's 40,000 multiplied by 2.17. Okay, so please confirm the values that I'm writing. I will have stopped for you to get me the value, but because of time, I'll just go ahead and write what I have here. So, but please confirm it. If it differs from what you have, kindly use the hand icon button so that I can quickly stop and check back. All right, so the value of shares is 86,800. And so let's look at the value of debt. Did the question say anything about debt? It just said we have here that the 10% debenture is 15,000. And what's the condition for debenture? What's the condition for debenture? It says that it's 10%, right? The beta of the company asset is 0.763, while the debts of that of debt is 0.2, and return of government security is 12%, while return on debt is 17%. So the ordinary share are currently quoted at 2.7. Market value of debenture is 89.5x interest. So it is important for me to mention this. They said X interest. So if you hear X interest, it means that this does not include interest. Does not include interest. So there's what we call X interest and there's what we call cum interest. There's X interest and there's cum interest. Cum interest means that it includes interest. X interest means that it doesn't include interest. So they said the debenture, the rates that they are giving to us for debenture is X interest. So what is the total market value of debt? Market value of debt, right? So for the debenture, they said it's 15,000. And they said it is X interest of 89.5. X interest of 89.5. So we can say multiply by 89.5%. Right. So if I calculate this one, I get something around 13,425 as the value of the debenture. The value of the debenture. So now let's start calculate what will be my value of, what will be my beta of equity, my BE. The next thing is to calculate my equity beta, or what we call beta of equity. Okay, I'm coming. All right, please go ahead, Mary. Please go ahead. We don't have the time.
Please, can you just bring down the solution? This one that you got, because I got 13,350. Hello, sir. I don't know if the network is out on my name. Did you got 13,425? Please, can I see what you did there? It's 15,000.
So that's it on the screen. What do you say?
Sorry, did you get 15,000 multiplied by 89.5? Okay, sir.
Divided by 100.
I feel. Thank you, sir.
So beta of equity equals beta of assets plus beta of assets minus beta of debts value of debt divided by value of equity into 1 minus tax. All right, so this becomes the rationale upon which we get our beta of equity. So let's just start by fixing in the values. What is our beta of assets? The question says that the beta of company assets is 0.763. What we want to get is beta of equity, 0.763 plus beta of assets, 0.763 minus beta of debt. They said the beta of company asset is 0.763, while that of debt is 0.20. Value of debt. The value of debt that we got was 13,425. Sorry, my marker is jumping. This is times anyway. 13,425. Value of equity was 86,800. Multiplied by 1 minus 0.30. That's corporate tax. All right, so can someone just decluster this, and then what will be the beta of equity? What will be the beta of equity? So please confirm what you get. I have 0.824 or 0.82. Anyone? If you are looking at 2 decimal place or 3 decimal place, you have that. So please confirm that that is your answer as well, because before we now go to the market risk to ascertain what the market risk would be. Going back to our formula, we said is RS equals risk-free plus beta into asset beta into market risk and risk-free. So our risk-free, were we given? All right, so the question says return on government security. Return on government security is 12%, while return on the market is 17%. Return on government, and that is the risk-free. Risk-free return on government means things like a treasury bill, yeah, primary market, secondary market, yeah. So those are examples of government. Those are examples of government securities. So they said return on government security is 12%. Our beta 0.824. They said the market risk is how much? While the return on the market is 17% minus 12%. So you can see that the dynamic of this question was that we were not given our beta equity. We have to determine our beta equity ourselves before we can get the market security risk. So that's another way that CAPIM could be tested. Now, so if you can check, so this one will get something around 16.12%. So please confirm your answers. If it differs, like I said, use the hand icon button and then take me back a bit. All right, so what else do we need to do? What else do we need to do? Okay, I think we need to get the cost of debt as well. We need to get the cost of debt as well. We need to get the cost of debt. So we've gotten the cost of capital. We've gotten the cost of capital here. Then this is what we did using CAPIM. The cost of capital is 16.12. We now need to get the cost of debt. The cost of debt. And how do we get the cost of debt? If you look at the balance sheet of Collington, we were given a 10% debenture. The question says that it is a 10% debenture, and now that is So let me just use this to explain the cum interest I was talking about again. So now, if you notice, they didn't make mention of anything about tax when they were talking about this debenture. So let me go up a bit to the question. So this is the question we are trying to solve. When it comes to, they just said that the market value of the venture is 89.5% ex interest. So they only said something about interest here and nothing about tax. And the debenture they gave us here was 10%. So how do we get our cost of debt? So our cost of debt simply would then mean 10, which representing the 10% debenture, 1 minus tax, divided by the value that we got, the 89.5x interest, because like I said, it means that interest had already been taken out of it. So if they had said cum interest, we would have valued the interest in, we would have taken out the interest, but since they said cum interest, the assumption there is, does that mean, then means that interest had already been factored in, and then we can just go ahead and use the value like that. So okay, this is 10 and like, yeah, so this is 10 multiplied by 1 minus 0.3. This is 10 multiplied by 0.7. 10 multiplied by 0.7, that's 7 divided by 89.5. So your cost of debt, please check the answers. I have 7.82%. Your cost of debt is 7.82%. Of course, I think it should, because this is 7 divided by 89.50. So do this and then you should have 7.82%. All right, okay. I move on. So from there, now we've gotten our cost of debt, we've gotten our cost of equity, we have our market value already. So with that, we can calculate our working capital. We can calculate, is it working capital? Using the capital determine the company. Okay, yeah, we can calculate our cost of capital. So with this, we can calculate our cost of capital. What is our cost of capital? Now we need to, so our equity, okay, let's just say, hopefully we'll be able to use here without extending. Cost of capital, we have our equity. The market value of our equity, according to the question, was, sorry, according to our solution, we have a market value of 86,800. Our cost of capital that we calculated using CAPIM, our cost of capital was 16.12%. So please calculate it and give me the answer for this. We have our debt as well. The value of our debts, right? We have the value of our debt to be 13,425. Is part of the solution, what we did earlier. We have our cost of debt to be 7.82%. So please, I want someone to give me these values and then we can go ahead. Okay, so if you have the value, just unmute and speak. So I want somebody to get me this value. It's 86,800 times 16.12, and someone else should add 86,800 plus 13,425. Let's have these two so that we can have this total.
Okay, 13,992.
Which one is that, sir?
The equity.
The equity, 13,992.
Yes.
Okay. What's the debt?
So is that 32% or what's that?
Which one is 32%?
I'm asking for the what? I can't say that thing. It's 7 point something percent. I mean for the debt, what's the cost of debt?
7.82. Your voice is breaking, but if I can just try to pick what you are saying, it's 7.82%. So what is the debt value? 13,425 multiplied by 7.82%.
$9,666.6.
What do you call it? Can you type your answer in the chat box if your network is bad? Just use the chat box. So any other person can please confirm the answer for me. 13,425 times 7.82%. Okay, can someone else confirm this answer? I have 966.6. Someone else should please confirm. 13,425 times 7.82. Okay, I'm waiting.
Okay, 1,049, approximately 050.
All right, 1,049, approximately 050. I think that should look like it. So please, someone else can confirm if it differs from what I'm writing. Just speak. That 96 something seems to be far from what the answer should be. So I'll take 1050. All right, can someone please do the addition? 1050 plus 13,992. This is 15,000. 15,042. 86,800. I want to write it again for sake of clarity.
This one is 100225. Sorry for the other one. I didn't look at it very well. I didn't see it very well. So it's correct. The 1050.
Okay, so what is this one? What's this one?
Then the debt, the total 100225.
Okay. So moving on from there, let's calculate the cost of capital. Cost of capital, or what you can refer to as KW, would then be your total 15,042 divided by 100,225 multiplied by 100/1. So what's your cost of capital from here?
Percent.
What do you say?
15%.
Okay. Can someone else confirm? 15%. Okay. Please, if anyone has a contrary answer, kindly let me know. So I will just explain this question on the screen. When we come by next week, we will dive further from. We'll continue from here. We'll dive further from here. So the question says, an investor has a portfolio of shares in 5 listed companies. We have the name of company, the number of shares held, and the following data is given regarding all the shares. We have them listed as well. At present, the risk-free rate of return is 9%, while return on market is 15%. You are required to calculate the beta factor for the portfolio. You are required to calculate the beta factor for the portfolio and the required return on the portfolio. The beta factor on the portfolio and the required return on the portfolio. So, of course, in order to do that, you need to determine what the market value is. Yes, you are giving the market price in the question and you are giving the number of shares. So the first thing would be to determine what your market value is. And with that, you are also giving your beta good enough. For some questions, they won't give you beta at all. You would have to determine the beta like what we did earlier on. So you get the market value, and of course, that will help you to know what is the market value multiplied by beta. So the portfolio beta, the formula for portfolio beta is, let me give us here, portfolio beta. Portfolio beta is market value multiplied by beta divided by market value. So that's the formula for portfolio beta. So you calculate your portfolio beta, right? And after that, that will take you to calculating your CAPIM. You have to calculate your CAPIM so that you can get what your risk premium is. So that you can get what your risk premium is, you calculate your CAPIM. And after you calculate your CAPIM, and of course, you know what you need to calculate your CAPIM, similar to the formula that we have been saying, RF plus beta into RM minus RF, right? So that will help you in calculating your CAPIM. Once you calculate your CAPIM, then that would now help take you into getting what the expected return is. That is what you are going to use to get your expected returns. That's what you are going to use to get your expected return. So, but like I said, you need to calculate your CAPIM first, get your CAPIM, and after you get your CAPIM, so that takes you can use that to calculate what your expected return is, given the market value that you already have. You already have the market value, right? Yeah. So you already have the market values. Once you have the market value and you have the CAPIM, you can easily get what your expected return is, which is what the question is saying we should calculate. The beta factor for the portfolio and your expected return on the portfolio. Okay, please, so lay your hands on it. And when we come next week, let's see, most likely we'll continue with this question next week, or probably we continue with this question next week. And next week, please, we're going to be talking about the cost of capital, weighted average cost of capital. Someone is raising up his hand. Okay, Olawale, please go ahead.
Okay, good evening, sir. Hello, sir.
Good evening, sir.
Sir,
I can hear
sir,
you.
I heard that someone said that I can release pilot questions for, I don't know, maybe only for SFM and other course, but I know that the person mentioned SFM, but I don't know for that course. So I want to know, is there any way we can have access to that question so that we have something to practice before the exam?
That I can release pilot
Hello, sir.
questions.
Yes, a friend said it. I think it was told in the tutorial he attended, though they didn't give it to them.
Okay. Okay, all right. Yeah, so that means yes, I know that when the syllabus change like that, there are usually pilot questions for students. I mean, it's just like the essence of the pilot question really is because this is the new diet, and then you don't have, please mute your mic so that it doesn't
Okay,
the
sir.
network there's no interference. So the essence of the pilot question is because you don't have question and answer yet. I mean, you don't have Pathfinder yet. Um, Arguably because this is a new syllabus and all of those things. So it just gives you something to look out for. That's really the essence of the pilot. Pilots, it doesn't. I mean, it's good. It's good for you to prepare yourself for the exam, but that will not guarantee, let me say, 100% the success, but it's just something. Yes, so yes, we're going to see how we can get it. Currently I don't have access to it, but let's see, maybe by 2 weeks time when we're discussing our when we're having our end of the diet question and answer series. Yeah, so if we're able to lay our hands on the pilot, we'll share on the platform, that's on our Telegram page. We'll share it on our Telegram page for people to practice on their own. And if we get it before then, well, I can take my time to look at it. So when we come next 2 weeks, we can discuss the pilot questions. But if we get it after that end of that question and answer, maybe what we then just have to do is just post it on the group, and everyone can look at it and solve it ahead of the exam. If we have not done our live class by then, when we come together for the live class session, we can all look at it together and the dissect the question. Yeah. So, but as we speak, I don't have it. Yeah, someone is saying that it's available on Ican website. Yeah. So please, you can check Ican website. If you have something like that, good for you. Download it, look at it, study it, and most times I think they have the answers as well. Yeah, so it's usually question and answer. And like I said, all the aim is just because this is the first time the new syllabus is being tested. So yeah, just look at it, solve the question, and then just add it to your preparation pack. Okay. Next week we're going to be, please lay your hands on the question, like I said, on
Thank
the
you, sir.
screen. This is capital asset pricing model. It's just next week when we come, we're going to be talking about weighted average. We're going to be talking about WACC proper, that weighted average cost of capital. So this I know we've already introduced the topic tonight by talking about capping, but we'll just dive deeper next week and look at some variables, cost of debenture, cost of capital, and all of those things, and then some of the things that we need to know as far as the cost of weighted average cost of capital is concerned. So we'll go into detail on that by next week, God's willing. All right. So any question for me from anyone on what we have discussed tonight? Yeah, so for some that
Okay.
joined late, like I said, please hold on. For some that joined late, for where you will find the question in the video lecture, I don't know. I think, like I said when I started, that we had to review our material. That's the video lecture itself. So please reach out to Very Good Admin from tomorrow, and then let them know that you recently got the video lecture. However, some topics are missing, so they will tell you what you need to do to get access to the new one. But yeah, the good thing is that if you bought the video lecture this diet, you won't have to pay for the new one. The noise interference is affecting me. Okay, so if you got the video lecture this diet, you won't have to pay for the new one, but they'll just need to, maybe they'll send you a link or something, tell you what to do to have access to the comprehensive SFM video lecture in line with what we have in Icon Pack. Okay, so once you get that, you can then look for where you have the cost of capital in the new video lecture and listen to it, practice on your own, and then when we come next week, of course, you also have this CAPIM there. We've included CAPIM as well. So just take your time to study it, refer to the question and answer series on the video lecture as well, and then you can come next week prepared for the class. All right, Henry, are you ready to speak now?
Okay, I actually wanted to ask this question we just solved now. Can it be shared?
It can't be shared, sir. It's on your. You can take a screenshot.
Okay, okay. If you can go back, let me just take a screenshot to the solution. I have the questions. But I'll
Do you
just
mean
follow in. I think
do you mean the one that was solved or this one on your
the one we
screen?
solve now, right now in the class.
I'm not sure I can scroll through all the pages. Let me see how many pages do we have because it's not just one page. Let's
Yeah.
say this is one, this is two, this is three, this is four. Okay. All right. So I'll just scroll.
Okay, next page. Yeah, next page, sir.